You're all very welcome to this morning's practice news. This morning, the 16th of April 2021. Practice news, it's your news for members in practice. Now, our headlines this morning. Professional indemnity insurance. It is a tight market. It continues to be a difficult market. What's the effect of this on you? People have seen increases in premiums. Also, in rare cases, but it does happen, practitioners come to us in practice consulting and say, look, we're having difficulty renewing. So the renewal of your PII is not necessarily automatic. So we're going to be talking to Martin Adams of Oricus about that and the situation in the Republic of Ireland and Northern Ireland. Looking at tax in ROI, the TWSS reconciliation has a 30th of June deadline, which is fast approaching. Some employers have concerns about it. They're wondering if I accept the reconciliation early, will I have to pay early? They're wondering about that. They're also not seeing necessarily the payments that they've made when they go to do the reconciliation. So Nora Collender is going to come on to answer this and other questions about tax in a few minutes. Money laundering. In ROI, the fifth directive has been brought into law, bringing technological changes up to date, or the law up to date with technological changes. FRS 102, the accounting standard, and FRS 105, how fit for purpose are they for you? Are they too detailed? Do they have too detailed, too complex requirements? Or do they not give enough guidance and direction in areas where you need it? There's the next consultation of the next iteration of FRS 100 to 105, the accounting framework, is on its way. So you will have your opportunity, if you wish, to make comments on that, or to advise us on what comments we should be making. Insolvency. Both Northern Ireland and the Republic, there are changes afoot. 3 new SIPs, Statements of Insolvency Practice in Northern Ireland, on company voluntary arrangements, payments, and financial information. Okay, so very important, especially, dare I say, the one about payments. In ROI, there's a technical alert about creditors' voluntary liquidation, creditors' meetings held electronically. So that's absolutely crucial. Bring that up to date with the legislation that was passed last year. Okay, so that's insolvency. CA support, the successor to the Benevolent Association. We have seen an increase in members coming to CA support looking for help. Why are they coming? What help is available to them? And how could you make contact with CA support? CA support, the Benevolent Association previously offered, it focused on financial support for members. CA support offers more holistic help, more all-round, dealing with your mental health, your emotional well-being. So we're going to be talking to Dee France about that as our last item. So straight into it. Just 1 or 2 more things. This is our team this morning. Nora from Chartered Accountants Ireland to do with tax. You're all very familiar with Nora now and her excellent presentations. We have Martin Adams coming on to talk about insurance, Dee France from CA Support, and of course myself and Jeremy holding the thing together, we hope. Now, who are you? Just very briefly, I'm not going to dwell on this morning. A good smattering of people north and south from all over the island. We're delighted to have you. Disclaimer, look, these items are presented as news items with all the limitations that go with that. We endeavour to bring things up to date as quickly as in a most timely possible manner to you. But don't take action or don't avoid action as a result of any news item. Go back and research it yourself. Right now, so Jeremy, it is now over to you to give us to begin with the practice update.
Thanks very much, Conal. And as we frequently do, especially when our actual practice news shows line up with practice matters, I'm just going to take you through, and I think, Conal, you're going to give me a little bit of help as well at the end, just take you through 2 or 3 of the main actual news story areas on the compliance and the technical side from actual practice matters of April 2021. Now, for the second time, actually, we started in February. As opposed to sending out the hard copy with your Accountancy Ireland magazine, we're now sending out a link by email to all members in practice. And this link would have gone out just, I think, on the 31st of March with your issue. You have the lead story is from our colleague Dee, who will be joining us later on. We're having a chat to say about CA support. And so if you actually haven't received this yet or haven't had a chance to download it, it's still in PDF. You can actually download it and still read it, basically just like you used to with the old one. You can actually go to the link I have here, and it actually has all the old editions as well, going back for the last couple of years. So kicking ahead, Conal, what's the first area I'm going to talk about is money laundering. And if you can just move on the slide there. As Conal mentioned, and it's been long awaited here in the Republic of Ireland, we finally have the actual Criminal Justice Money Laundering and Terrorist Financing Amendment Act signed into law by the President on the 18th of March. Now, as you all know, this actually brings the EU Fifth Directive into Irish law. And as Conal mentioned, some of the key changes here is it allows money laundering, not big changes like the Fourth Directive a couple of years ago, but allows money laundering and the legislation to catch up with technology changes. So one, for instance, change is that now the use of electronic identification is something that is written into the legislation, and that you can use it in just the different ways and means. Now, again, this actual legislation was delayed for about a year or so. There is the matching in the UK and in Northern Ireland actually since January 2020. And the Act itself, it has to be finally commenced by an order signed by the Minister of Justice, which we expect actually over the next couple of weeks. So really definitely by the end of April. And most of the Act should be commenced. There might be a couple of little things around trusts, express trusts and so on that mightn't be commenced. But when it actually is fully commenced, there's going to set in place a motion of work by actually the Institute, by also its fellow accountancy bodies that make up CCBI, getting very comprehensive guidance together on what are the key changes. All of that stuff will be coming out over the next couple of months, we hope, as I say, so keep an eye out for different notifications, particularly technical notifications, more technical team on e-news on a Friday and special emails. Now, as well, if you actually are, you should, of course, have your own AML procedures in this area. They'll need to be updated. We, of course, and if you're a user of our toolkit in this area, we actually will be updating our toolkit. I think the work is quite well advanced already by my colleague Michael, who might even be on this call this morning. And we hope to get that out over the next couple of weeks. So if you are a user, as I say to you, we'll be having a new version of the toolkit. So keep an eye out for that, keep an eye out for the emails, and we'll be telling you a little bit more about that over the, as I say, coming weeks. Now, I'm not finished with anti-money laundering yet, and Conal, if you can click on to the next slide, actually, and actually even the next slide again, I'm going to talk to you about anti-money laundering reporting. Now, this is an area where we're seeing a little bit more interaction, and particularly between, in the Republic of Ireland, between An Garda Síochána and the Financial Intelligence Unit and the different accountancy bodies. There's actually been a joint practice group set up to actually better share intelligence, to, I suppose, better allow better understanding by accountants in particular in practice of the work of the Garda Síochána in this area, anti-money laundering reporting and so on. And in that, it's actually had 2 meetings so far in 2021. And I suppose some things An Garda Síochána would like us to highlight here is just the amount of suspicious transaction reporting and how better, I suppose, accountants can work and what different things they can do in this area. So it's actually quite a large number, as you'd expect, of suspicious transactions reporting, just actually under 25,000 in 2019, and actually a bit of an increase so far in 2020. Actually, I think the first 11 months we figures is 27,000. Now, the one thing, as you'd guess, is most of these are coming from financial institutions, banks, credit unions, insurance companies, whatever it may be, well over 20,000 of these. And the one thing An Garda Síochána has noticed, as we all know in practice, you're kind of the gatekeeper for small companies with relation to financial integrity and your work, is that it's very low. And I think it's the same in the UK as well, that less than 1% of all the suspicious transaction reports come from accountants. So we're talking just a couple of hundred really. And that is very, very low for a sector that is actually so much involved in Irish business and representing particularly SMEs. Again, they have analysed what's on the registered entities on GoAML, which is the actual online system for actually making a suspicious transaction report. You can set yourself up in the system, I'll talk about it in a few minutes, but there's only 194 accountants and auditors in the Republic of Ireland registered on this system. That's very low when you'd consider there probably would be somewhere in the region of 2,500 to 3,000 across all the different institutes in the Republic of Ireland of practices. So definitely a figure that needs to be improved upon and so on. Also as well, just for our Northern Ireland, UK listeners, this column unfortunately is similar there. I think across the UK, there's maybe there might be just about 5,000 or 1% again of the 500,000 suspicious activity reports that the NCA receives in the UK in a year come from the accountancy sector. So still very, very low reporting. Now, again, you're going to ask me what exactly can accountants do and how can you, I suppose, learn a little bit more about this area. And Cornel, if you can actually click on to the next slide here, a couple of simple things you can do to get yourself prepared. Now, I know many of you here today probably have never actually made a suspicious transaction report in the Republic of Ireland. So first thing I'd say to you is you don't have to be making a report to actually register for Go AML. If you click through the links here, you can actually set up and be registered. And also in doing this, even though you mightn't be making a report at the moment, is you're ready if you do have to make a report. And also by being on this system, you get updates and alerts about different AML training, different things as well that Garda Síochána might be doing. Very, very good. Now, as you should know, it's a dual reporting system in the Republic of Ireland, as well as making a suspicious transaction report to the actual Garda Síochána. You should also make the same report to revenue. And again, you can set yourself up on the revenue system to do it here. In Northern Ireland, same thing goes. It's actually a one-stop system, though, a one-stop shop with the NCA. So if you actually haven't used that before, you can set yourself up on their SAR online reporting system. Now, that's a couple of easy steps to do, but if you want to brush yourself up on what exactly, I suppose, is the format around suspicious transaction reporting, what to report, what not to report, we've got some good materials here. The first one actually is a webinar being run jointly by our sister body ICAW and the actual NCA in the UK on the 27th of April. It's a free hour-and-a-half webinar kicking off at 12 o'clock. If you click through the link there, you'll learn more about it. And really, it's going to go into detail, I suppose, about what are the things you should be looking out for, potentially amongst your client base, their activity of what makes up suspicious transaction reporting, and basically how to be more alert in this area and what to report. So please do, if you have a chance, check it out. And it's equally applicable to anybody in the Republic of Ireland as well. So don't be put off just because it's primarily an English-based actual webinar. Now, again, specifically on the Irish reporting, many of you may have attended, and it was very well attended. There was Professional Standards had a course with Garda Síochána and with the revenue actual team in this area about how to report and what they're seeing. It was back in December 2020. A recording of that, 45 minutes, is on the YouTube channel that we have here for the Institute. Please check it out if you didn't get a chance to, or if you want to learn a little bit more about this. So that's pretty much all I can say to you about AML. Of course, there'll always be new guidance and so on coming up on this area over the coming months, particularly professional standards, regulatory bulletins. One just issued last week, Bulletin 28, but there'll be other ones coming up as well. Cornel, move on to my second topic here. And the next topic here is just about, I'm going to call them other key regulatory updates. And the first one here is with relation to FRS 102, 105, as Cornel mentioned. The actual FRC has committed that every 5 years, it's going to look at what changes are needed to the full suite of UK and Irish GAAP, so FRS 100 to 105. And time has started here. The last review they did was actually starting in March 16, so they're starting now on March 21, and they're just seeking stakeholder views in relation to what changes do you as a stakeholder, and this is both the institutes themselves and big users, but also right down to practitioners who are preparing financial statements and auditing financial statements. What would you like to see changed? I know people often say to me a couple of things about FRS 102, financing transactions, very complicated. Deferred tax, does it need to be there? Does it need to be that complicated? Well, look, if you were particularly bugbear about these things, you can now get your comments and make them as a stakeholder to the FRC. There's an email address there and a link about more details. Cornel, I think you've flicked me on. If you can get me back again to that slide, it would be great. But basically, by 31 October, you can actually make that actual presentation. The Institute as well, I know, as a body representing members, will be making a presentation as well and making its feedback to the FRC over the coming summer months. And there probably will be consultations and you'll be asked about this as well. As a next step in this area, when all the actual consultations have been taken in, changes agreed upon, there will be a further public consultation to make people aware of what the agreed changes are. That'll probably be next year in 2022. And then there will actually be more than likely an effective date, give people time to bed it in, probably 1 January 24, which will be 5 years again from the triennial review effective date, which was 1 January 19. That's all I'm going to say on that one. Cornel, if you can click on again. One for the auditors coming up now, and this is relation to the IASA recent CPD guidelines that came out actually about 6 weeks ago now. This is one in particularly for interest to all auditors, but again, particularly auditors who might not actually have many clients in the Republic of Ireland. Perhaps you're semi-retired, maybe you don't have many clients in the area, maybe you're in Northern Ireland in the UK and you might have no Irish clients, but you're still Irish audit registered. Definitely, I would say to download this and have a read of it. And there are some key changes that they're asking the different bodies, the different actual RSVs and different, including Chartered Accountants Ireland, how they monitor the ROIs in this area. So what we're going to see from this is such things as required annual declarations by RIs with relation to their audit CPD they're doing, and also then keeping records in this area, and that the Institute would be checking up with these records for all RIs at least every 6 years. Now, there's a sting in the tail here, Conal, if you can click on to the next slide, of what training you'll be expected to do if you're an auditor for the Republic of Ireland. It's very prescriptive here that a statutory auditor is to undertake CPD that's Irish relevance, so that you actually CPD on the Irish auditing framework, on the financial reporting standards that are used in Ireland, and any company law, be it Irish or European legislation, that impacts on the preparing of financial statements or their audit. And again, they've been very clear here, there isn't an out here if you're semi-retired, if you have a very small amounts of Irish audit clients or no audit clients currently, or if that you're not in the jurisdiction, you're expected to still keep up to speed and be able to show that you have regulations in and that you have training done in this area. So I know that Professional Standards have, in the last couple of months, sent out a request to all auditors in the Republic of Ireland, Northern Ireland, everyone in our books, that if you wish to just be registered in one jurisdiction, be it Northern Ireland or the Republic of Ireland, that you can actually go with that option. So it's one to think about for maybe practices in Northern Ireland. In the UK, you are seeing more onerous requirements now coming down the track from 2022 from IASA on auditing CPD. So maybe if you don't audit in the Republic of Ireland and have no intention of doing it, maybe you should sign off that you won't want to be on the Irish Audit Register anymore. As I say, more guidance will come from the Institute in this over the coming months from Professional Standards, so keep an eye out in your regulatory bulletins and your emails in that regard. Now that's me done. Conal, I know you have one final thing to tell us. You're going to tell us about insolvency.
Indeed I am. I'm just going to take 1 second to tell you about insolvency. There have been some new SIPs issued in Northern Ireland. Now, if you're involved in insolvency in Northern Ireland, these are absolutely crucial. These are requirements for you to follow in terms of company voluntary arrangements, the preparation of information on insolvency proceedings. That's, you know, there's some important changes there, but I would particularly draw people's attention to the SIP 9, the payments to insolvency office holders. Obviously, if you're dealing with money and making payments, you've got to follow these rules. So I would ask people, if you're involved in that, to click that link there and follow the instructions. Now, we've also issued a technical alert, a new technical alert, replacing the previous one of the same name. Guidance for insolvency practitioners meeting creditors during COVID-19. What do you need to do if you want to hold an electronic creditors meeting? The various steps you have to follow. There are certain requirements that you have to follow in terms of, for example, you have to tell people what electronic platform you're using, Zoom or Teams or whatever, and so forth. So I would, if you are involved in holding creditors meeting, there's your link, follow that. Now, I think we will move from that straight into tax. We are having a little bit of difficulty making contact with Martin. So if you see me furiously working in the background, that's what I'm trying to do. So over to you, Nora.
Good morning, everybody, and thanks very much for joining us today. I see a lot of interest with the TWSS related issues, but look, I'm going to start off with the PUP because a lot of workers have gone back to work on Monday from the construction sector. And just to flag for you that those workers will be receiving 0 credits for at least a 2-week period. And that's because they will still be receiving the PUP for 2 weeks when they make a notification to the Department of Social Protection that they've actually returned to work. And then once the PUP payments have stopped, the Department of Social Protection will contact Revenue and give Revenue an update that the employee is off the PUP, and then the employer then will update the employee's tax records to put them back on full tax credits, but on a week 1 basis. And they in turn then will issue the RPN, the revenue payment notification, to the employer. So there's a few things there just to flag. And you, as the accountants of a lot of the employers and running the payrolls, you'll be hearing about this. So it's important that you probably have the full picture. it's really vital for the employee to notify the Department of Protection and fill in the close of the pandemic unemployment payment application on the Department of Social Protection website on the first day they go back to work. And then it's also important for the employer not to run the payroll too far in advance. So the objective would be to try and run the payroll near as possible to the actual date that the updated RPN will issue from revenue. Because if that's the case, if the employer is not working from the updated RPN, well, then the employee is going to be subject to 0 tax credits. So that effectively is going to cost them a lot when it comes to their net take-home pay, and that in turn is going to generate questions and issues. So the advice there is for the employer not to run the payroll too far in advance, so that they can get access to the most up-to-date RPN, recognizing the fact that the employee is off the PUP. Now, Revenue have a really good worked example based on an employee going back to work on Monday. So it'll set out the dates and it'll show you the timing of the PUP payments going to the employee and the interaction between the Department of Social Protection and Revenue and how this all washes out. So that's up on Revenue's website, and we've also placed the link up here on the webinar here today. So I'd highly recommend that you take a look at that if you're involved with this issue at all. And just working, let's say, you'll see on Revenue's example there, they're talking about a guy called Stephen, and he goes back to work and he's taken the full 350,000 or 350 euro on the PUP, and he's earning €1,000. And what are the implications for him being on the week 1 basis? So on the week 1 basis, he's not getting the benefit of his cumulative credits and rate bands that he hasn't used up for the period that he was unemployed. And the objective is to try and offset, collect as much of the tax arising on the PUP in 2021, so that the employee doesn't end up with a tax liability at the end of the year like they did, let's say, in 2020 when it came to the PUP. However, if he stays on the week 1 basis for the entire year, well, then he's going to end up actually overpaying tax. So there is a sweet spot there sometime in the year when the employee needs to notify Revenue coming off the week 1 basis. So we're in discussions with Revenue about how they're going to manage that. Obviously, the average employee is not going to be aware of this, and they're not going to have an understanding of week 1 and cumulative and how it impacts. And ultimately, if we don't address it, then it's going to end up being an issue in December and January of 2022, when the preliminary end of year statements start issuing to this cohort of workers. So there's a piece of work there that we're going to be following up on with Revenue on how they're going to manage that, and what point in the year will the worker come off the week 1 basis. Of course, I'm operating on the assumption that there'll be no more lockdowns and there'll be no more requirements to go back on the PUP. And of course, every individual taxpayer's tax situation is different. So that must also be factored into by Revenue, but there's certainly a conversation to be had there on how they're going to manage that. So the Institute will be going back to Revenue on that issue. And indeed, if you have any other points that you'd like to put to me on any complications or any questions that you have on the working of the PUP and people coming off it and returning to work, you're more than welcome to email it to me, because I've asked Revenue if they give me, I suppose, a line of communication on this issue, because so many of our members are supporting employers who have the workforce now returning. And ultimately, you'll also be there trying to look at the payroll records and trying to put the whole picture together for the financial statement. So it's really important that I get your input into this process. Okay, so my next topic then, just to cover, are the TWSS reconciliation process. So this is stage 2 of the process. Stage 1 of the reconciliation process, as you all know from painful experience, was due on the 31st of October in 2020, and Revenue have taken in that information and they've compared the information prepared and submitted by the employer with their records on the actual subsidy that was paid, that was due to each employee. And they have exchanged that information. It's all available there on the employer's record, setting out what Revenue believe is the final TWSS payment due to the employer. And then, of course, there must be an account made for any TWSS overpayments. And those TWSS overpayments primarily relate to the first 4 weeks that the scheme was in operation, when there was a flat rate paid over the actual subsidy rate payments that was due to each employee. That was only really established in May of last year. So there was a period there of potential overpayments that now must be paid back to revenue. And the key point there is that the TWSS repayment, that does not fall due to the 30th of June. So the employer can go ahead and agree the reconciliation with revenue, and they can be assured that that's not going to accelerate payment of the TWSS. The TWSS still holds to be paid on the 30th of June. And there are a number of mechanisms in place then for managing the payment. So any employer who's already in the tax debt warehousing scheme, they are automatically entitled to have the TWSS repayment warehoused also. And then if the employer is not in the tax debt warehousing scheme, they can go ahead and make a case to be in the tax debt warehousing scheme, so long as they fulfill the criteria. And if that's not an option, then they do have the option of trying to enter into a phased payment arrangement with revenue to manage the payment over a number of years. So look, that is key, because we were getting feedback that employers were nervous about accepting the reconciliation process, but look, it's not going to accelerate the payment. Now, I know that some employers also have made a down payment or paid funds on account to deal with the TWSS repayment. And when they're looking at the reconciliation file, that's not showing up at the stage where they go about accepting the reconciliation statement. We've put this issue to revenue. Revenue assures us that the records are linking, so that there is a link to the actual payment. And that's also recognised on the output from RevPay. So the employer will have details on their RevPay statement recognising the payment. But once the employer accepts the reconciliation statement, well then the payment that they've already made will be netted off against the TWSS repayment that's showing up on the reconciliation statement. Now, I can fully appreciate how it's like, you know, an employer has been asked to accept something that they're not getting full view on, that the payments that they've already been made are going to be taken into account. But revenue tell us that the records are linking, and that it's just a question of hitting the accept button, and then the statement of liability will show the fact that the payment on account has been made. We were also contacted by members who were very stressed out because they were trying to review the reconciliation file on behalf of their client, and they couldn't view it on the system. And this is to do with, there's some kind of a glitch or a tweak that's necessary with the tax registration process. The agent may have taken on the client, or they may have incorporated, or for whatever reason have changed their TAIN number. So there is a process involved there that does require them going back to the tax registration section of revenue and getting a box ticked so that they have full sight of that. And details of that are set out on Revenue's TWSS Employer's Guide on section 4.2. So that should be available there for the agent to get the access to the information that they need in order to support the employer with the reconciliation process. So the next issue then is this TWSS tax on the employees. So this is following on from the preliminary end of year statements which issued in January of this year, where the employee was given estimates of what revenue sees as their tax liability arising from the TWSS. So there are a multitude of issues arising from this, and these issues are obvious, of course, today from the chat and all the questions that have been generated. And I'm very aware that the last time I spoke to you in January that I told you we were looking at all these issues, and I assure you we are looking at all these issues. And indeed, the CCABI, that's Chartered Accountants Ireland, ACA, CPA and CIMA, we got together under the auspices of the CCABI. We made a survey of our members. We got over 180 respondents, which is a really good sample for a survey for busy people like yourselves to respond to. So it was very clear that there was a lot of information that was needed from revenue. Firstly, we need direction on how an employer would possibly establish the tax associated with the employee's TWSS, because the preliminary end of year statement won't necessarily give you that information, because you're looking at many variables there for each individual employee. They could be self-assessed, they could be jointly assessed, so their spouses' details could be mixed up in that preliminary end of year statement. So we need some direction from revenue as to how an employer would establish the TWSS tax on behalf of the employee, for the purposes of the employer just even starting a conversation with the employee on whether the employer can afford to pay the employee's TWSS for them. So when we park that issue, then we have another one with the benefit in kind concession. So revenue have said that if the employer pays the employee's TWSS tax by June, well, then they're not going to treat that as a benefit in kind. There's not going to be further PAYE implication on that. There's a couple of issues around that. Does that apply to proprietary directors? How does that apply to self-assessed taxpayers or employees? So an employee could well have a self-assessed aspect to their tax profile because they might have rented property or something like that. So it's not clear, and it's completely inequitable then for an employer then to try and go about paying off the TWSS for a certain cohort of employees and not being able to do that then for another cohort of employees. And then you have the other issue then that employers need more time. This is a resounding feedback from the survey that the employers, they are willing to have the conversations with the employees, but June is not necessarily the date in which they will have any idea of their financial position for 2021. And they need at least up to 2022 to get an idea on the cash flow of the businesses and to see whether they'll be in a position to meet that liability on behalf of their employees. So look, we have been lobbying. I have contacted revenue on that. You'll see that we've made a detailed submission on it. I know that we've got media interest as well. I hope that there might be some flagging of this in the Sunday papers. So hopefully if we bring it to a wider audience, you know, the fact that then employers are actively considering it, but there's a number of barriers there in place before they can actually make the decision, and how do they actually then go about collecting or working out the tax. So there's a lot to be considered, but revenue are considering it. Not much good for you here today, but as soon as I have information for you, I promise you I'll post it up on our website, and it'll also be available on Tax News and e-News. So just a quick roundup then on some other matters. There was a flagging from revenue at TALC meetings there at the start of this year that there was a worrying trend in compliance slippage among businesses that were in the tax debt warehousing scheme. So revenue were telling us that about 40% of businesses in the tax debt warehousing scheme weren't filing tax returns. So even though the debt is warehoused and they're not expected to pay down the PAYE or the VAT, the business still needs to file a return, even if it's a zero return or even if it's an estimated return, they still have to get it in. So revenue shook the tree and sent out a lot of letters there. They would have gone out to, you know, the businesses that were properly complying with their tax obligations, and there was about 30,000, about 26,000 letters went out then to the the businesses that were in the slippage zone. So revenue have said they've got a good response, and a lot of the businesses have now responded with the tax returns. And look, it's very understandable. You know, they've got so much on their plate, trying to work through another lockdown that really wasn't foreseeing the extent and the depth of the issues that we were going to be here in this lockdown. So it's completely understandable that businesses were completely sidelined with other issues other than tax compliance. But revenue are noting that there was a good response. But just to flag for those businesses that haven't responded and who are in the tax debt warehousing scheme, revenue are going to be taking the issue now to the next level. So that means they will be contacting them, and there will be serious threats probably for the loss of tax clearance, the withdrawal of the terms of the tax debt warehousing schemes. That means the VAT and the PAYE would be accelerated and be falling due. And there could be potentially be a withdrawal of CRSS and EWSS for any businesses that are also availing of those subsidies.
We're just running short of time, Nora, just to flag that with you.
No problem at all. Sorry, Colin. So look, just another important issue I just want to bring to you is that the Institute has been working with revenue looking for a concession for directors whose employers are in the debt warehousing scheme. So we want to have a situation where that director will have a credit for the PAYE that's actually in the debt warehousing scheme recognised in his or her 2020 tax return. A TDN issued last week which suggests that that's not going to be the case when Revenue take this approach. However, I am told that the matter is still under consideration. So the ball is still in play. We're still in it with a chance of having some kind of an arrangement put in place with Revenue for this issue. So, okay, I'll turn you back to Conal. I'm sorry if I ran over. Apologies.
No worries at all, Nora. That was a very, very comprehensive update. And just before we actually click on to Martin and to Conal, my slides here, if you're on the Northern Ireland, UK side, if you're looking for some updates on employee and business supports, I know we had Leontia on the last show in March, but you can always contact Leontia Doran, our actual lead, UK tax lead. There's some great updates there, both in the tax newsletter, which goes out every Monday, and so particularly around the new tax year and so on. I've included a couple of links there, and also around the Brexit duty reimbursement scheme. That's all I'm going to say on that. As I say, any questions to Leontia, and she'll be happy to cover off those in the coming days. Next up, I'm going to hand back to you, Conal, and to Martin and yourself. I know you have the topic of the day, insurance, to talk about.
We do indeed, Martin. It's good to have you on
Thanks,
on the line. Yeah, professional indemnity insurance. It's an existential issue for practices, because you must have insurance. If you don't have insurance, you don't have a practice when it comes to PII. So it's an issue that is, when it works, it's invisible, but if anything goes wrong, it becomes a big problem very quickly. Now, luckily, that doesn't happen for most practices. What I've been seeing in the past year is increases in premiums because of the tightening of the market. But you know, in a small number of cases, people actually having difficulty with renewal have come to us for help with that. Has that been your experience also, Martin, of what you're seeing out there?
Yes, certainly, Conal. I mean, I suppose it really started in 2018. So it started with Lloyd's carrying out a complete review of all of their insurance lines that are underwritten under the Lloyd's banner. And unfortunately, professional indemnity insurance was the second worst performing insurance sector. So following on from that, a lot of Lloyd's syndicates and a lot of companies were asked to actually correct their book. So that led to a number of issues. Some insurers and some syndicates actually pulled out of the market completely. And the others that were left, obviously, they needed to increase the rating to correct their loss-making sector. Following on from that as well, you'd see that the remaining insurers that were left in the market were more selective in the types of risks that they would write, but they would also reduce any level of cover that they would write. So on the indemnity side, so if an insurer was writing, say, 5 million before, they may only write 2 million now, and then that leads to added problems. So yeah, I mean, there is a big issue with the number of insurers in the market at the moment actively writing professional indemnity.
And this is an issue that affects Northern Ireland and the Republic of Ireland. It's driven, I suppose, from movements.
It affects the world
in London,
actually,
by the sound of things. Yeah.
It affects the world. It's not just an Irish. It's not just the whole of Irish problem. It's the whole of the world problem.
Yeah. Well, with the view to saying, look, I mean, we can only control what we can control. I suppose just focusing in, drilling in, and as you said, this is a problem with professional indemnity insurance across professions. You're talking about lawyers, doctors, dentists, etc.
Yeah, absolutely.
As well as ourselves.
So now, to be fair, like despite what members may say about their premiums increasing, they're not as badly affected as the construction industry. Like the architects and the engineers and the construction, they have a significant increase in their rating compared to the increase on accountants' professional indemnity.
Yeah. Yeah, which is something to be aware of if you have clients in those sectors, that the pressures that they're coming under. Once again, as I say, this is a do or die thing. They have to have insurance or they can't operate. Yeah. So look, I mean, do you see differences between ROI and Northern Ireland? Is it
yes, I
across the
do.
board?
Obviously, there's a lot of issues under the banner of Brexit, but what I've seen actually is it's probably more of a problem from Northern Ireland, because I've seen a number of firms who have contacted us where, if they're registered in Northern Ireland, their insurers wouldn't cover them for any work they're carrying out in the Republic of Ireland, which is crazy, especially where you've got a cross-border firm where obviously they're going to do work on each side of the border. So we don't have a similar problem in the Republic of Ireland, to be fair. Like if we write a Republic of Ireland risk, it will still cover them for work they carry out in Northern Ireland and the UK. But it seems that some insurers in the UK are pulling back on the level of cover that they'll provide, and they'll only provide the cover for UK risks. So it is a problem.
Yeah.
And either they've got to separate out and take out two professional indemnity policies, which I wouldn't recommend, because then you've got a difference. If there's a difference in the contract, or there's a difference in the work that's carried out, you've got two insurers deciding on who's going to actually pay the claim.
Yeah.
So it is more of a problem for Northern Ireland than Republic of Ireland, to be fair.
I see. I understand. So yeah, so if you've got any business across border, it's something just to watch out for and zone in on that and make sure that you're covered. And indeed, if your renewal is coming up, to sort of have that conversation, I would imagine, to see, am I going to be covered across border, or is that going to be something I need to be thinking about now?
Yeah, absolutely. I think people need to, before you could actually fill in the proposal form and submit it to the insurance broker, and there isn't an awful lot of additional information, and then you get a quotation back. I think people really need to start thinking about their professional indemnity about 6 weeks out from the renewal date at the minimum. And especially if they are based in Northern Ireland and the Republic of Ireland, to have that conversation now. I've certainly come across some firms that have contacted us where they've only found out after they've renewed the policy that it doesn't cover the Republic of Ireland issues.
Yeah.
So it is important to have that discussion early.
Absolutely. Taking it more broadly, what is perceived, say this in the smaller practice market now, because this is what we're talking about here.
Yeah.
What are perceived as being the higher risk activities to be involved in from an insurance point of view?
Okay, so obviously insurance is written on the split of the fees that the accountants and the activities that are involved. So probably top of the league is PLC and financial institutions work. So any accountant that's involved with any PLC work or work for financial institutions is perceived as high risk. Now, we can normally get that caveated by the insurers. So if it's a credit union, it's not perceived as a significantly higher risk as some other financial institutions.
Okay.
But what you've got is things like tax avoidance schemes, and I would include BES in there.
BES. And EWIS, presumably.
They would be classed as high risk, and also work for any entertainment or high net worth clients, because they would have deep pockets to actually try and sue there have been claims against accountants. I mean, they're in the paper anyway, but members of U2 against their accountants, there's significant payments on claims that were made under the professional indemnity. So any high net worth or entertainment client is deemed to be high risk.
Yeah, I understand. So if you've got high risk, if you were talking to an accountant about, is it one, and you're always seeing claims going forward and you're investigating the claims and looking to see, well, God, I wish that had been done. If there was one or two things they could do relatively easily in order to minimize the chance of a claim, what would you ask people to be doing?
Yeah, I mean, like, you know, hindsight's always a great thing. And you look at when a claim comes in and you think, okay, well, perhaps I could have done something a bit better in actually handling the risk. But I mean, I've always been, my big hobby horse is letters of engagement. And I think letters of engagement can save people so many times. And the one thing not to do is deviate from that letter of engagement. So, you know, the letter of engagement sets out the work that you're going to do for the client. Don't deviate from that, because once you start deviating from that and adding extra free advice to the clients, then that's when the problems start to occur. So, and I know you shouldn't go into every contract and say, okay, well, am I going to get sued for this? But certainly you should make sure that the records are up to date, and that, you know, obviously all the records are electronic now anyway, but just make sure you've got your files are up to date with everything that should be on it, with every contract, you know, because like effectively people will try and take a claim, whether they're valid or not is another matter. But you still have to defend, or the insurers still have to defend that claim. And all the ammunition you can give the insurers to defend the claim, the better for you.
Yeah. Well, absolutely. So, I mean, if you don't have an engagement letter, you fall at the first hurdle. This issue was actually discussed as late as yesterday at a meeting at the Members in Practice Committee, because, you know, this is a live issue, and that certainly came up, that some of the practitioners there, and like these were all small, medium-sized practitioners, some of them had moved deliberately in the past, say, I don't know, 10 years or so, or less, to get engagement letters for everything. In the past, people used to get engagement letters for audit because that was perceived as being what you had to do, but they've moved to get engagement letters for everything. That said, others had sort of taken soundings with their peers, and it would seem that still is the case with many practices. They have engagement letters for audit, but not for other things. So presumably you're falling at the first hurdle if you don't have the engagement letter.
Yeah, I mean, the reason why I'm so hot on the engagement letter really is because it does outline exactly what you're going to do for your client. And so, like, you know, you can go to your client and say, right, okay, I'm going to carry out A, B, C, D, and E, not X, Y, and Z. And there have been claims in the past where there have been no engagement letters and the accountant thinks they're doing one thing, the client thinks they're doing something else. And there was a specific claim where the accountant was appointed by the bank to help a client, and the bank thought they were doing something completely different. So nothing was nailed down in the engagement letter. It all went wrong. And then you can't fall back and say, well, look, I've done exactly what I've said on my engagement letter.
Yeah, absolutely.
So that's why it's so important.
And limitation of liability clauses. I mean, for most engagements, barring audits of ROI companies, you can limit your liability. I mean, there's a particular structure for doing it for Northern Ireland companies, but
I mean, I recommend that you limit your liability to 5 times fees, unless it's a specific high fee contract. So it could be mergers and acquisitions or something where there's a significant fee, and then you can actually put a monetary amount into it. It was interesting, actually, I read recently where there was an article by another professional organization where they recommended limiting the liability to fees earned, and then the contra argument from a solicitor was it wouldn't actually get past the Unfair Terms of Contract Act. So because the amount was too low, then it wouldn't be acceptable in a court, and then you'd be liable for the full amount. So it is important to pitch it correctly.
Put it in, but don't overdo it. Okay, I've got that. And if in doubt, I presume take advice. Look, obviously people, you know, are concerned because a notification of a claim is what kicks off the process, perhaps ultimately of having a higher premium or being refused. So notifying of claims or notifying of incidents, tell us a little bit. I mean, should we change our behavior, Martin?
Well, I think you get two responses from a professional indemnity claim actually. So you get people that become very angry that their professional advice has been questioned, and then you get people who just stick their head in the sand and think that the situation's going to go away. I think the problem is, like, and I know it's very difficult, that if you do get a notification or a complaint, that you actually try and look at it independently and deal with it as quickly as possible. Now, the one thing I would say is that the policies are quite strict, and you should notify any issue which you think you become aware of which may lead to a claim. So there's no harm in actually notifying for the sake of notifying. So like we would have a number of notifications on some of our clients where we don't believe there's going to be a claim. We just think that the client's a bit concerned about the situation. They've notified the insurers. We're aware of the situation. If it doesn't develop, we'll just close the file. The important thing is, though, that you engage quickly to actually try and resolve claims. And like with some insurers, and you know, people make mistakes. If you don't make mistakes, you don't need the professional indemnity in the first place. And we've had cases where the accountants have come to us and said, okay, we've made a mistake. We know we've made a mistake. There's no point defending this. If we get in early, we think we can resolve this claim quickly for a lower amount. So there was one particular one where it was 17,000, and the accountant said, if we offer 10, we think we can get rid of this. And we got insurer approval, go and settle it, get it over and done with. It was all done and dusted within a month. That's unbelievable. So people can just move on with their lives after that.
Yeah, absolutely. Well, look, Martin, it's so therefore the message is notify. I've got that there. Just another issue. Look, this issue was debated yesterday, say, by the members in practice committee. There was really no appetite amongst the people who are being regulated for any sort of removal or reduction on that in the requirement of PII. It's seen as being an absolute necessity, and some people there had insurance more than the minimum required because they felt that's what they needed in their practices. So look, that's where it's at. What they did ask me to do, though, was to send around a link, which we're going to do at the end of this, to the Institute's engagement letter formats, which contain limitation of liability clauses for you to use. And look, it's there. Martin, you were saying also to me that if somebody wanted to contact you, if they were concerned about whether to make a notification or not, perhaps if you're not their insurer, that you'd hear them out as to whether they should notify.
Yeah, absolutely. Absolutely. I can give them an independent opinion on the current situation and guide them through it if they need any assistance for it. That's not a problem.
Sure, absolutely.
Yeah. I mean, the one thing I would say, Colonel, is like, the run-of-the-mill accountant should not be concerned about whether they're going to get professional indemnity or not. They will still get a professional indemnity quotation. Where you're heavily into some of the higher risks areas, then that's when you really need to start looking at the professional indemnity at least like 8 weeks out, really. If you're heavily into tax, PLC work or entertainment work or something like that, then it needs a bit more consideration this year than other years, really.
Yeah, absolutely. We'd advise people on that front. Martin, listen, that was really interesting. Thank you very much for your time. I'm sure we'll have you on again in the future to catch up on this again. Hopefully the market will have turned around a little bit.
Hopefully.
We don't be quite as concerned.
I think what we need to do is as the premiums do increase, then hopefully the appetite for competition will re-enter the market, and then that will stabilize. I think that's what everyone wants it to stabilize, really. It's just crazy at the moment.
Yeah, absolutely. Well, look, so hopefully it's a cyclical thing and it'll turn itself around. Thank you very much. Thank you very
No
much.
problem.
Martin.
All right.
Very
Thanks.
Thanks, guys.
Wow.
A very comprehensive actual chat there. I know that some questions has come in as well, and what we're going to do, hopefully Martin can stick around with us, and even if not, anyway, we'll address those at the end, or even maybe get them out in an email or something afterwards to people as well. I think we covered off a lot of the issues there, so thank you again, Martin. Now, for our final actual part of today's show, and as I mentioned at the outset, we always do have an extra few minutes, so hopefully you'll get to stay with us to 5 past, maybe 10 past 11 today. And I'd like to first of all welcome Dee France back to Practice News. I know, Dee, you were with us back in November for actually for 2 shows, one Northern Ireland, one Republic of Ireland, and from actually from those shows, we got a lot of interest from different people about the wide range of services you now offer. As Conal mentioned, it's not alone what the Benevolent Fund used to do on the financial support side. There's so much more now, and it's been such a tough year as well for everyone, mental health wise, support wise, and so on as well. And I suppose it was just great, and I know we were talking about this a week or so ago in planning the actual show, is just to maybe talk through some of the, I suppose, very simple steps that if you do need help, what are the steps to actually contact you, what exactly supports can the actual can CA support give, but also as well, even I suppose just what have you been up there for the last couple of months as well. I know there's always very interesting webinars and different things even on a daily basis that you and your team are working on, Dee.
Yeah, great. Thank you so much, Jeremy. Yeah, I'd have to say it's obviously upsetting that, our numbers are up quite considerably from last year. So they'd be up about 50%. So we've had that kind of level of engagement, that increase in engagement just in those 12 months, which is a worrying trend. But then we have to kind of acknowledge the fact that this has been a year like no other, and a very, very difficult year for the majority of people. I don't think actually anybody could actually say that they've had, no kind of extra stress or extra pressure, or suffered any kind of setback with this pandemic. I think it's actually just been fair to say that it's been horrendous pretty much for most people. So I'd say really in the first sort of stages of kind of you might kind of acknowledge that you're maybe having a more difficult time, you might be a little bit extra stressed than usual, or you might kind of think things family wise, you might have had excuse me, a shock to the system, let's say a family relationship breakdown, or kind of issues professionally, in the office, dealing with kind of the extra pressures there. I would say the simplest thing is to just pick up the phone to us. I want to just say from the outset that there's that level of comfort. We are completely separate to the institute. We have like our own team, and we have our own board of directors, and there's like a Chinese wall, or kind of a sort of a firewall around all of the information that you might share with myself or the team, and it's never shared outside of those confines. And it's really, really important for people to know that. So I think first and foremost, pick up the phone or email, and you'll talk to one of the trained professionals there. And then we kind of really, it's almost like a triage system. We would kind of have a look at what's going on for you personally and professionally, and just kind of assess the situation, listen to what you might have to say and what's going on for you, and then we would decide then on the supports that would be available. So really we would then refer you into kind of professional counselling if that was something that you might need, and you have 8 sessions for free with a third party, so you go beyond that, the institute for that. Then we might kind of talk about, other supports. So for instance, you might have a kind of a career issue, or any kind of other issue that we might refer you back into the institute, for instance, like into the career service, or, other areas of the institute for like the Reg and Sub, for instance. So it would just be kind of like working with you, and it's all about yourself. It's not about kind of, we won't be kind of giving you support that's not needed. So we'll be very much listening to what's going on for you. So I suppose that's the kind of the most important thing. And I think really it's just about acknowledging that, we sent out a survey, and I might have mentioned it at the last session, I'm not sure, but we sent out a survey in June of last year, and we asked everybody, right across the board, all the different cohorts of the membership, what's going on for you. And 50%, and actually in this group alone, 57% of you mentioned that, you know, your mental health, for instance, had taken a step down in, you know, since the pandemic emerged. And, you know, that's really something that we have to acknowledge and we have to kind of look at and stare down the barrel of, if you like. But there is so many things that you can do from a lifestyle support perspective, from kind of, you know, asking for the help in the first place, and really just, you know, engaging with us, because we are actually here for you. I think that's really the most important thing, Jeremy. You know, the people know that there is this whole support network here for everybody who's a member of the Institute, and the students, of course, as well.
Yeah, no, I think that's really it, because I know just yesterday I was going through the CA support section of the website again, and there was great feedback there from users over the last year or two, as I say. And one line that particularly struck me is that the hardest step sometimes, and it's so true, can be, you know, you need some help, but you're a little bit worried about, you know, picking up the phone or emailing, or, you know, who will contact me? Will there be somebody there to answer? And it's just making that, and that's what the person said, making that first step. And then, as I say to you, there's somebody there to talk. You're right, it's totally independent, non-judgmental. And if you need help, be it wellness, be it counseling sessions, that you can be very quickly given that. And so it's a great support service to have there. And I do think that a lot of people, as I say, are probably maybe in need of it, but not aware. And I think you were saying to me previously, is that, is it a 50% increase in calls you're seeing over the last 12 months?
Yes.
I'm not surprised.
No, I mean, unfortunately, that is the reality that we're all dealing with at the moment. But I think that, you know, like for instance, you might see, you know, some of the supports that we offer would be in the area of wellness coaching, and people might go, oh, well, look, that's not for me. You know, I haven't got time for that kind of, you know, self-care, if you like, and the idea that it might be a bit selfish or a bit indulgent. So what I would say to people that would like to take a first step in kind of looking after themselves, okay, and I think this is really a key thing. Stress is a massive issue, and I think most of us are dealing with an awful lot of stress at the moment. And in terms of wellness, it actually, the stress hormone, not to get too boring and technical for a minute, but just it is interesting. We're trying to boost our immune system at the moment, and stress would be one of those things that erodes the immune system. So if you're having a heart transplant, the surgeon will actually inject you with cortisol to suppress the immune system so you don't reject your new heart. And I think that's actually just like unbelievable to think that that is what stress could be doing to us, that if we're actually suppressing our immune system. So if you were to look at your kind of your wellness coaching and what would actually happen in those sessions, you'd have a conversation about your nutrition and all that good stuff, and making sure your gut health is good and you're eating the right foods and all of that. But we would be looking at ways of reducing your stress. So stress management would be a key thing, and I do an awful lot of work, and the team do an awful lot of work around stress management. So those are the kind of practical things that you can do. I can look at my day. How can I reduce the stress in my day? You know, and actually I would ask a lot of people, so what's your stress like, you know, day to day? You know, would it be like, you know, what percentage of your day would you be feeling stressed? And if someone's coming back to me and saying, and I hear this a lot, well, I'd say about 40% of my day is I'm feeling pretty stressed, and maybe sometimes it would be acutely stressed, I will go back to them and say, if it is over 5%, you're actually doing damage to your system, to your bodily functions, and all of your systems in your body. So that is actually a wake-up call for some people. And there is some really, really simple things that you can do. So about your sleep, your nutrition, what is your support network, your own network? You know, are you getting out? Are you meeting people? Are you talking to people? That social, you know, glue that keeps us all going, and having the laugh and having the downtime. And it all sounds a bit corny and a bit silly, but actually these are, you know, life-saving. And I say that pretty strongly. These are life-saving things that you can be doing in your own day-to-day, you know, routines that will make a massive difference. So those things are key, definitely.
Oh, I agree. And as I say, I know in our last time back in November, and actually if anybody wants to go back and see the actual recording of it, it was actually in mid-November. We have all our recordings on our practice consulting section of the website, so you can actually see that, because you give a great overview of the exact services you have there. And I know they're on the CA support site as well. But you know, I even find that myself. It's I think everyone, it's great we've cut out the commute, but in some ways we've replaced the commute by simply sitting at the desk, and so we're getting out loud. And you know, you think, yeah, I'm sparing an hour or two a day, but I'm not, because people are homeschooling, they're doing different things, and it's just, we don't spot it, but we are very, very stressed, and we feel we're never getting away from work. And it's great to have CA support there, that you can help on the simple things, say to you, like that wellness coaching, something I said to you back in November, I haven't quite got there, but I will be taking it up myself, I feel, in time. And it's definitely something to use, and just to get the message out there. And you're right, stress and anxiety and depression. I know I just shared it on LinkedIn there yesterday, a very very good article that you had from our sister body ICW and CABA in the UK, and it really brought it home, and the support services as well. So it's great this morning to have that overview, Dee, and I know I've put it in here in the link as well. If you do want to learn more about everything from what services are there, is it for you, what if you want to help and get involved in CA support, just go to that link there on the actual website. And Dee, you're always there, and your team as well, always there to have a chat if you want to learn a little bit more from either helping or availing of the services. So thanks again for taking the time this morning to come and join us. And I guarantee you that while it's always, as I say, it's not a good thing to have an increase in these services, that's what we're there for. So please do make use of them.
100%. And Jeremy, if I could just very quickly jump in to just give a little plug, we actually have a webinar next Thursday on stress management. So some real practical tips and tricks and how can I actually manage my day a bit better. So we have an expert in next Thursday at 3 o'clock.
Great. And look, I'll share that actually on LinkedIn for anybody who's connected up with me on LinkedIn. You'll see some details on that. And I'm sure it's actually probably on our actual website, on our webinar forum, and also here on CA Support as well, it'll be mentioned. So I must check that one out myself, really looking forward to it. Listen, that is that, as I say here, and we're nearly at the end, but just to give, I know we've had some questions as well, Conal. I'm not sure, are you able to see those questions?
We have a lot of questions. We have a lot of questions coming in for Nora and for Martin and for myself. So I haven't seen one for you, Dee. I'm sure that they will come in now that you've just finished here. So will we keep going for a few minutes, guys? I don't know if everybody can.
I think we keep going for a few minutes. As I say to you, everyone that can stay with us, please, great, as I say to you. And is Martin still with us, or we can answer some of these questions ourselves? Anyway, Conal, you've been looking at them.
Well, I'll just kick off. Someone's asking us, is there a template for how much cover you should have? Well, from a regulatory point of view, it's set out in the public practice regulations. So I'll just tell you that you have to have 2.14 million euros cover, or 1.5 million for any one claim and in total. So you cannot have aggregate cover. That's not enough. Okay, you need to understand that. If your gross fee income is less than 856,000 euro or 600,000 pounds, the annual minimum limit of indemnity for any one claim must be equal to 2.5 times gross fee. So that's with a minimum of 142,000 or 100,000 euros or 100,000 pounds. So that's all there. Those are the minimum requirements. I'm not sure whether the person was talking about a minimum level of cover, or from a commercial point of view as to whether there's a template for that, Martin. I'm not sure there is. Or
what we're seeing, I mean, obviously the Institute has their own guidelines, and what we're actually seeing now, where perhaps some accountants in the past have gone over the minimum guidelines and taken higher levels of cover. They're actually looking now at the limits that they do require for compliance reasons, and maybe reducing that down a bit. Even though, like, I've said earlier that, there are a lot of claims out there and everything, getting claims over €1 million is very few and far between, to be honest, on the general run of the mill accountants. So they should look to comply with the minimum requirements, but there's no point in actually significantly over insuring on the limit of indemnity.
Okay, that's good to know. Somebody's talking about one person asked me to recommend the Bannerman report or Bannerman type report. Yes, do, absolutely. Every report, including accountant reports and any of those things, add in the sort of for your eyes only piece, which is the Bannerman paragraph. Very useful, very useful. Not a requirement. Nobody can tell you your audit report is wrong because you don't have a Bannerman paragraph. It's just a really good idea to have it in from your point of view. Yes, we will give you the limitation of liability clause. That's in the link to the engagement letters that we have. One of them is the audit one is free. I think there's a nominal-ish charge for the non-audit one. So someone says, what does 5 times fee mean? Does it mean 5 times the fees for the year, or 5 times the fee you charge the client for all the years since you start providing service to the client?
Okay, so the 5 times fee is if it's a single contract. So if you're just doing a single contract, it'll be 5 times the fee for that particular contract. But if you had a client where you're doing work throughout the year, it will be the total fee for that client in the year.
I see. Okay, that's very good. Thank you very much. Nora, is there any questions you have there that you'd like to
Well, as it happened, most of the questions I covered during the presentation. So it's just to assure everybody that we are fully aware of the issues there with the tax arising on the TWSS for the employee and the dynamic between the employer looking to go about trying to pay that and the implications then for self-assessed individuals and the BIK concession. And we're also very much aware of this potential major problem for directors whose employers are in the tax debt warehousing scheme and the problems that they might face in October if they don't have a PAYE credit on, allocated to them when they go to file their tax returns. So we are aware that. I know the TDN issued last Monday, which might suggest that Revenue are not going to look at it, but I contacted them on the issue of that TDN and they assure me that they're still considering the matter. The only thing is with that particular rule, it's governed by very strict legislation and there's a lot of tax appeal commission cases around it as well. So, you know, it'll be, the Revenue will have to craft some kind of a carve out or some kind of a concession very carefully in order to accommodate us, but it's still on the.
Thank you very much, Nora. That's great. Someone's asking me it's really an audit question, I guess. They have an audit client who has a PI issue. Look, the whole area of going concern in audit, the standard has gone way up for this current cycle of audits. You must be getting your clients to prepare the client's own assessment of going concern.
Yeah. All
right, you got to be doing that on every audit, not just ones where there's a problem with going concern. So yes, the client should make their own assessment of how they are going to solve their PI problem, and it's up to you as an auditor to assess that and audit that. And it does sound like something that you need to resolve before signing off or include in the accounts and the auditor's report. So there's that. Somebody else is asking regarding a lot of questions on PII. Martin, I think we've hit a topic of great interest with people here. It says many peers I've spoken to have referenced astronomical premium increases. What is your perspective on why this is happening, and do you see any sign of stabilization? I think we've covered that. From a competition law perspective, are the CPC, the Competition Authority, or other agencies reviewing the market? My peer network has expressed concern at the perceived level of information sharing by insurers when pricing up primary, secondary, and subsequent layers. Should insurers not be quoting independent of one another?
Well, the insurers do. The professional indemnity is slightly different to the likes of car and house, where you know there's allegedly, you know, there's been alleged cartels and things, but like professional indemnity, it's an open market in Ireland. Anyone can come in and anyone can go out. And the problem is that you know, as I said, 2018, it really started where you had a complete review and insurers leaving the market. In fact, I did some analysis on claims, and you know, the average accountant's claim. I'll just get it here. The average accountant's claim in 2018 was 38,000 euros. So if you've got one accountant that's getting a claim of 38,000 euros, supposing the average premium for an accountant is, say, 1,500 euros or whatever, you've got to write, you know, another 20 odd firms that are not going to have a claim before you even stand still on this. And that's the problem. So the claims and the cost of the claims are rising. And the problem is that even if you don't have a claim, we've got cases where claims have been closed with no payments, but you still got a 20 or 30,000 euro defense cost to pick up. So that is the problem.
That's a huge battle. It's a whole other thing to think about, the defense costs and so forth. It's we could have another whole conference on that. Interesting. Okay, listen, I think we'll have to leave it there. We're well over time, and we'd really better wrap up. I know I know we have one more slide just to look at there, just to put up there if you like.
We do indeed, Conal. We have some upcoming webinars, and we've something for everyone, I think, here from our governance conference next week, actually, with actually on Taoiseach Micheál Martin and also Diane Dodds, Northern Ireland Economy Minister, and many other speakers focusing on sustainability. We have some auditing and financial reporting webinars coming up. I'm sure you got an email from us yesterday, hopefully, on that. And looking forward to those sessions on the 29th of April and the 6th of May. And totally away from technical, growing your practice, of course, and even trying to stand still here at the moment and so on. And particularly if you're a new practitioner, taking your practice at the next level, our virtual classroom.
Now, someone's
very
telling me
popular.
to reshare the slides, so just let me do that.
Indeed. But again, if you click on to the slides, you'll get all those. The good news is as well, our next practice news is going to be about 6 weeks' time on the 4th of June. So we'll be looking at the similar mix of tax, technical, and a couple more topics as well. We haven't the exact lineup at the moment, but it should be another good show, I'd say, and just before the June weekend as well. So it won't be long rolling around. I suppose from our point of view, all I can say is to thank everyone, particularly our guests here this morning, for Martin, Nora, and Dee, for taking the time to join with us. Very informative sessions, great feedback, as I say there. So thanks, guys, and also just to thank you guys as well for sticking with us for the hour and a quarter, as I say to you. Hopefully you found it useful. And just to say as well, to thank the background team, as I say as well, particularly on the CPD side. So Chris, our technical man, who is always there, making sure everything goes smoothly. Linda and her team as well, and Paul Devlin and everyone else in CPD. And my own team, of course, as well in practice consulting for Bernie and Catherine and Michael, who are always helping us out here in the background as well. I'm sure I've left other people out. Thanks to everyone who's taken part and helped us along in this, and marketing team as well, of course, who are always great to us as well. So Jenny and everybody else there. Yeah, that's me, Conal. Have you anything else to say?
Thanks to yourself, Jeremy, and a special thanks to Chris, because I think we had some technical difficulties there as we went through. I don't think it impinged on the quality of the thing, but we got there. All right, guys, and Martin and Dee, thank you very much.
Yeah, thanks.
Nora.
Thank you.
Yourselves. Take care now. Take care, everyone. Cheers.
Bye, everyone.